GBTC's discount hit a record minus 26.5%. As many people know, Grayscale's Bitcoin Trust, one of the most popular Bitcoin products, the largest Bitcoin product in the world, especially for hedge funds and large institutional investors. They had a premium for years, which meant that the NAV, the actual amount of Bitcoin that was in the fund, the stock was trading at a higher price. So you could basically buy the Grayscale shares in the private market, and then when it became liquid, you would be able to arbitrage that with what the stock traded at. That is called the GBTC Premium Arbitrage Trade. Literally, there was billions of dollars put into this trade. But as you can see here in this chart, starting in the beginning of 2021, that premium flipped to a discount. At first, it was a small discount, but it has gotten bigger and bigger and bigger. GBTC hit a record 26.5% discount, meaning that the stock trades 26.5% lower than the actual Bitcoin that is in the fund. Now, GBTC has about $27 billion or so. It's down 17% in 2022. Why exactly has that discount increased? Well, there's been a recent sell-off in Bitcoin, which contributed to a larger discount as well. Of course, Bitcoin's down 37% from its all-time high in November. GBTC doesn't allow for share redemptions like in ETFs. And of course, there's also been ETF launches in Canada and other places around the world. Now, the derivatives-backed BTC ETFs launched in the United States also. So ultimately what people were doing is they were buying in the private market. They were then waiting 6 months and 1 day for it to become liquid traded. Then they would arbitrage the premium. When it flipped to a discount, that no longer was available. And so ultimately what ends up happening here is that people who are holding GBTC, they have a couple of options. They can sell at the discount, 26.5% less than the Bitcoin price or the Bitcoin amount in the fund. Or they can hold and wait. Grayscale's actively working. They're trying to convert this trust into an ETF. Now, there's a lot of people who want them to issue some sort of redemption functionality or allow that. There's other people who say, look, just convert it to an ETF. But the big hurdle to converting GBTC into an ETF is the regulators. The SEC, they have not approved a spot Bitcoin ETF yet. They only have that derivative-based one. And so ultimately, what we are watching is a waiting game. How long will it take for the SEC and other regulators to actually go ahead and approve a Bitcoin ETF in the spot market? Then, how long will it take for them to approve Grayscale to convert the Grayscale Bitcoin Trust, GBTC, into an ETF? Once that happens, you would expect to see a return to NAV almost immediately. And of course, anyone who's holding the asset, then that would be positive for them. We have a couple of quotes. First, with the Director of Research and CIO at ETF Trends. He said, there's still no way for Bitcoin to ever leave GBTC, which means it should continue to trade with a substantial discount to reflect that illiquidity. Grayscale, I think, has like 3 or 3.5% of all Bitcoin in circulation inside that fund. And then the president of Spectrum Markets, GBTC, keeps breaking hearts as the discount widens. GBTC is basically a binary bet on a physical ETF at this point. Tempting, but tempting the way value traps can be tempting. So obviously he ain't so excited. Then we have James Seifert, who obviously has been on the podcast before. He broke down what would happen if it was converted to a spot ETF. He said GBTC is still trading at a massive discount, around 26.3%. Many think this means a 26% return if the fund converts to an ETF, but the return is actually much bigger. Eliminating a 26.5% discount would be analogous to a security appreciating to $100 from $73.50, which is a 36% return. There's no guarantee this discount will ever collapse or that the discount couldn't get worse. And these scenarios excludes the risks and price movements of Bitcoin itself. But GBTC is essentially a levered bet on US spot Bitcoin ETF approval at this point, in his opinion. I tend to think that this is a very, very interesting opportunity. People who understand the risks and who want to take that levered bet on a US spot Bitcoin ETF will go ahead and allocate capital here. And also people who don't want to do that will just go buy Bitcoin on the spot market. What do you guys think?
So my question is the incentives that Grayscale has to convert this. Doesn't their fee like dramatically get reduced if it turns to an ETF? Like, I know they've said that they're going to do it, right? And you have to take them at their word for that. But ultimately, like, the fees dramatically decrease, I believe, if it gets turned to an ETF. So they would be incentivized to keep it in the structure that it is today, right?
So the Grayscale Bitcoin Trust, I just looked this up. I believe this is true, is that Grayscale's annual management fee is 2%. on that fund, which is high compared to an ETF for sure.
Yeah.
The average equity ETF charges just 0.53%. So it's about 4 times higher than the average equity ETF from a fee perspective. But ultimately, what's worse than it being fee compression, which I think ultimately everyone in this space believed was going to happen. The worst thing is that if you're at this massive discount, you basically have to shut off new capital inflows. And so that's what they've had to do. They're not taking more capital in and the private placement. And so if you're not taking more capital in, you can't grow AUM. And so even if you are going to get less money on a per investor basis in terms of the fee you charge, the more important thing is that you continue to grow assets. And especially if you're the largest player, if all of a sudden you get caught, you can't take new assets in, somebody else can, you may actually give up the number one spot if somebody else is able to take in assets, you're not, and you basically are caught in this, this discount. So I think that for them and for the investor, it's better when it gets converted. They've been very open with it. Look, they had their lawyers actually publish a thing saying, hey, there may be legal action here for us to force the regulators' hands, et cetera, et cetera. I think it's just, it's a weird situation for everyone. And until it gets converted to a spot ETF, I think that we're just going to continue to see this. If you go and you buy GBTC today, basically what you're doing is you're buying $73 or so of Bitcoin, or you're buying $100 of Bitcoin for $73. The question is just in the future, if you go to sell it, will it be worth the $100 of Bitcoin that you actually bought? Will it be worth $73 or will it be worth less, right? Nobody knows where it's going to end up being. But I think part of what is so tempting about it is that you're basically buying $100 worth of Bitcoin for $73, right? So it is a discount. And the idea is that if you have a really, really long time horizon, ultimately the question comes down, do I think that they're going to be able to convert this to the spot ETF? If so, then it's interesting. If you don't think that's going to happen, then you should stay away from it. Now, the other piece of the analysis that people forget is you're not just making a bet on only the conversion, because there's still price exposure to Bitcoin. So if Bitcoin goes down in price, that will affect GBTC. If Bitcoin goes up in price, that'll be a tailwind for GBTC as well. So there's the discount plus the price exposure to Bitcoin. So I think ultimately people who are buying this right now, in the most basic sense, they're making two things that they say, okay, I believe that Bitcoin will be a good bet over some period of time. That is my investment horizon. And I believe that Bitcoin, the Grayscale Bitcoin Trust, will either not have a bigger discount, or it will end up actually going back to NAV or close to NAV, right? So like the discount will actually become less or eventually return back to NAV. So if you believe Bitcoin's a good bet and you believe that it's going to happen, then people would end up buying.